quality, but gas demand can decrease. Okay, fundamentally I like it, but it's dropped too much. Okay, and want to see why. Okay, by the way, guys, Alexei made a quite interesting point. Quality, but gas demand can decrease. I've read about this industry a bit more, and the interesting thing about it, because they create their profit from two main activities. One is distribution from the one spot to another spot. So it's like through the pipelines. And the second one, they have certain reserves. So where you can store the gas or oil. So what happens with the oil companies when the price goes down? Sometimes companies, what they do, they are going to pump the oil from the ground, but then they don't sell it straight away, all of it. They try to hold it on, and they put it in reserves. Okay, so when companies fill the reserves, when the oil price cheap, this company, EQM, they make money out of it. Also, their clients, the companies which, for example, refining businesses, which buying oil in order to refine it, and after that sell as a diesel, some kind of oil, or any other already final products, they also use low prices as advantage, and usually they buy quite a lot of oil during that period and also store it. So for us as owners of EQM, it's a good thing, because it tells us that regardless the price of the oil, still EQM will get cash. And first of all, their charges, it's not always related to the price of the oil. They still have to charge certain amount of money for the transportation, regardless if the oil price goes even twice as low as it from the previous levels. They still get some cash for that, and also they can get cash for storing excess of that oil which people buy for the future terms. All right, so that's why EQM is kind of a secure company with a secure business which can preserve our kind of capital. Yes, it might not grow that fast, because there are certain restrictions for building those pipelines. Mostly they can grow by buying other companies, which might increase the debt or it might increase the unit holders. But at the same time, we understand that whatever profit they already create, they will be creating that. Because I presume you understand that the barrier to entry into this business is quite high. So in order to, for instance, if we compare this type of business with the retail industry, where the competition can enter very easily. So for instance, if you have a network chain of stores, small people, regular people can rent the premises beside you and open the store and buy stuff in China, and then they will be selling and competing with you. Or maybe even they will compete online without even opening the store, which is creating high competition. That's why in retail industries, earnings of companies very, very volatile. Whereas in this particular case, in order to enter this specific industry, you have to have a lot of investments, huge amount of cash in order to start building those pipelines. Okay, it's first, and secondly, regulatory barriers. Not every company would be considered as a provider of this type of products, because if you don't have a history, if you don't have certain support, financial support, government probably won't allow you to build that specific pipelines. And the third one, if you already kind of build certain pipe, I very, very doubt that competitors will come and put another pipeline close to your pipeline. Probably government will allow a couple competitors to have their pipelines in the same type of area in order to secure if something happens with one pipeline company, there are other companies which can support and deliver the oil and gas in all region. But they won't allow too many companies to come, because it will create certain risks for the environment. And that's why if you already get into the certain area, most of the time you can expect very low competitions there. It's similar to pharmaceutical industry when we discuss if you already have the pharmacy in one region, so it's less likely that new pharmacy will come and open close to you, because there are certain like pharmacy on certain amount of population. So similar stuff kind of here as well, which kind of good for us if you own this company. All right, I don't know, Alexei, if I answered this question, but from the gas demand, of course, because people will distribute. That's true, but then they will make money on the storing of this gas. All right, let's have a look what calculations I come up with. So we can see that this is 35 points. Industry rank is the highest, timeliness rank is the highest, safety is, on the safety I lost 3 points. And if you remember how to calculate safety, that's probably on the recent price drop. And because the company fell down in price quite a lot, I lost 3 points. Also debt level, on the debt level, I lost 6 points here. And we looked at this, so for us it's important if the debt is manageable. So at the moment we can see that they can pay that debt if they want to. Okay, yes, they have $5 billion, close to $5 billion in debt, but their net profit is close to 1 billion this year. So it will take, if they decide to distribute the debt, they will be able to do that. And also we know that the new project will come up next year, will create additional profit for the company as well. Volatility is, on the volatility we lost 1 point, not that much. And on the growth trend also we lost 3 points, because they kind of, despite they have very good history of growth, for whatever reason they show us very low future growth. Okay, so that's why 3 points is lost here. And also management, I put here less points because, first of all, the profit per unit is not growing. The revenue per unit is not there, like I mean the growth. And also because they have these challenges with the local regulators, it's like a lawsuit. I think it's up to you if you decide, because it's not a lawsuit, it won't destroy the company will still survive. And even though if that project is not going to go ahead completely and they will close it, they're going to create a profit from whatever projects they have now. So the earnings is not going to be reduced, or maybe it will go even higher those expenses. Now, and that's why we have 35. So I would say it's a 3, Guy TAC and Guy 3, but it's very strong 3. Okay, in this particular case. When we look at quality, it was dividends. Okay, because it had 1, because remember the higher company pays dividends. If it's more than 50%, we give it kind of only 1 point instead of 4. All right, and the rest of points we have 12. Here, risk and reward ratio. Remember in our formula, it's calculation. If it is negative, it's kind of calculates in the wrong way. So if you calculate it properly, the risk is practically 0 there. And the reason for that, because based on the calculation which we use PE calculation here, the lowest price supposed to be $59, and right now is already $29. So it's like $20 before the lowest price. So we have no risk of going down, but when you put in this spreadsheet, it calculates that minus 20 is close to whatever price is there. So it's not exact specific calculation. So here it's 12 as well. So altogether we have to have here 49 points. So it's very, very strong kind of buy for us. And the reason for that, if we evaluate it, look, the highest P ratio, average high P ratio, 18 times. So it means that for each dollar company earns, people pay $18 when everything is good, everything is rosy, they good like future projection, etc., etc. When the projections are bad, the company suffers through difficult time, people are paying only $11 for $1 of profit. Okay, that's an average in the last 5 years. Whereas right now it's only 5. Or 6 times. So they're paying half of what they're usually paying in the lowest and the worst case scenario. So even if the company goes back to 11, PE 11. So with the current price, like earnings of $5, it's most likely to go jump to $60. So double in price. That's why this company, despite all the challenges, remain very, very undervalued and has a high potential for jumping up. And guys, I presume the last couple of days gave you a very good lesson in the sense that the undervalued companies, they can move up quite high. I don't know if you sold calls for Signet or sold calls for Teneca, and I presume you're biting your lips now because like Signet moved nearly 30%, Teneca moved nearly 30%, and of course, even if you collected 2 or 3% on the selling call, you didn't receive now all this additional profit on the growth. And that's how undervalued companies move. So if you see that the company which you own dropped in price and you kind of tempted to sell call, always evaluate it. So how much you generate from the call and how much you will generate if the price is moving up that much. Okay, so at this particular case, we will look at what kind of actions we can make in order to make money with the QM. Of course, we look at long-term investment, short-term trading, and also option trading, how much money we can get from each activity. But that's how we evaluate this specific company. Okay, guys, before I proceed, I also wanted to show you about the ownership. Institutional holdings only 43%, despite the high level of dividends, only 43%. And I presume this type of lack of institutional investors, like because of this very strange tax structure. Okay, in this particular case, before I think before last year when we looked at this company, there was about 75% of ownership. So 25% of ownership they sold of their shares, and I presume they also affected the price drop. Okay, in this particular case. All right, but still, target price on FinViz also $48, and value line we see it close to $50, $60. So all of them practically twice as the price right now. All right, guys, can you put from 0 to 10 how fundamentals of this company clear for you? And then we'll go ahead with the technical analysis for this company. Okay, fantastic. All right, technically. So that's what we see from the very beginning. So the company went public in 2012. And so we can see how quickly it went up. And remember, we looked at the value line, the P ratio was somewhere here at 31, then 20, so quite high. And again, if we go to this 2013 level, so the price is lower than here. It's actually here as in 2012. And if we go in 2012, okay, the earnings was only 90 cents. Okay, and the price was $31. And at the moment, the earnings $5 and the price is exactly the same, close to $30. So the company is making 5 times more than it was making in 2012, but the price is exactly the same. So which definitely shows us how undervalued this company is right now. So if we look at technical indicators, we can see that all of them in oversold situation. And we don't see this turn back here, although MACD already kind of turning back, and we see that those bars, they become smaller, but here we don't see V yet. Okay, when we see kind of letter V, that would be probably the good time to enter position. So we have to watch it. And of course, if we look at this long-term trend, so it might go slide down even lower. So it's like parallel lines. But then when you provide like additional trend, I put from this through these lowest points, we can see it's kind of triangle is forming. Okay, and at the moment probably $29 level is close to whatever was here. So I wouldn't say it is a strong support, but it might hold the company on that level. Okay, this is kind of a small thing which we have to consider. if we look at the daily chart, what I've noticed here, after the big drop, company goes for a few months kind of sideways, usually. Okay, you see the drop and then it goes sideways. Drop. So if we kind of base our project in the same type of way, so we might expect that it might go sideways. So it might bounce back and then go sideways. The question is how long is going to last and what's the kind of the volatility range. Okay, now that's why I put here the levels. So we can see here the trading range was from 51 to 57. So it's like $6. Here from 39 to 47. So it's what, $8. So we can easily expect that now it's going to go in the same type of range, $6 to $7, maybe $8. So, and if it bounces from $29 level, easily can close this gap, and whatever was before the support might become a resistance. Okay, so it might bounce back from $29 to around $39 and trade in this range, but that kind of would be waves for a couple months. One we see like from October to November, December here, right? So a few months, or smaller trades in this kind of area. So if we look at the hourly chart, so it's 1 hour chart, we can see that it's still on a downtrend, but kind of the range is becoming smaller and smaller. So it's kind of slowing down, and in the end of this triangle, so we might see the breakthrough. Is it going to go down or is it going to go up? We will see. But from my experience, I kind of put more bet on that it's going to go up. All right, in this particular case, and most likely it's going to happen when the kind of good news come out to the market on the side kind of areas. So here on the hourly chart, we can see it's neutral. So it might continue to go even lower down. So we can buy it lower. But of course, the question is, what are we going to do now? Are we going to enter this level because it's so undervalued and it has such a huge potential of growth from fundamental perspective, or based on technical analysis, we are going to wait longer because it's still sliding down? Okay, and it might slide down even more because the technical traders, they're going to push this company down. So that's why the question, guys, for you. So what do you think from technical perspective with this company? Is it the company which we can buy today, tomorrow, or is it the company which we have to keep watching and enter this position on a different level? And if you believe that, so what levels you think we should enter and buy this company, if we decide to buy this company, of course? Okay. Mick put, I will not try to buy until there is a reverse confirmation. More than 45, you mean you after that will be waiting for that? Or it has to go more than $45 and after that you'll buy it? All right, okay, good. So you are going to buy on a breakthrough pattern. Okay, so it has to go 30% up before you buy, correct?